Hello again. We'll be starting up our live stream soon. Hey, we keep winning. How you doing? How's the audio? Is it too loud or is it okay? Mikey's back. How you doing? Mikey's back. Okay. Can you guys hear me all right? Good. Okay. We keep winning. Good. Okay. It's okay. Okay, great. Thanks. Thanks, guys. Appreciate it. Okay, great acoustic. Actually, we're worried about the acoustics because I'm actually at the shop this morning, and for me, it sounds like there's quite a bit of echo. So I appreciate your input, your feedback. So okay, we'll get ready to get going. So hello again, everyone, and welcome to another edition of Silver Bullion Television, SBTV. I'm your host once again, Patrick Vieira. If you are new to this channel, once again, please do go ahead and subscribe to our channel. Click on the bell to be notified of new updates, and do give us a thumbs up if you like what we do. We appreciate your support. We are also on social media. You can find us at silverbullion.com.sg, our website. On Facebook, we're at Silver Bullion SG. On Twitter, at Silver Bullion PL, PL for Private Limited. And you can find us on iTunes and Spotify just by going to bit.ly, bit.ly, SBTV iTunes, or SBTV Spotify. So again, I do thank you for being here. I know it's evening where most of you are at. PM Ruckus, how you doing? Standing Skeleton, Randy Fresh. How you doing, buddy? So yeah, I know it's a bit late where you guys are at, or getting to be a bit late. So I thank you for being here. We're gonna have Silver Bullion founder Gregor Gregersen. He'll be joining us in a bit. I think he should be on his way. So I do hope you guys have a lot of questions for him. He's a pretty smart guy, and he can definitely answer your questions regarding things like this big 15 kg of silver, which I can't hold too long because I didn't eat my breakfast yet this morning. But 15 kgs of silver, roughly about 483 ounces. So we do have some of the big boys here since I am at the office today. Yes, we keep winning. It's a very huge silver bar. It weighs almost as much as a monster box. So it's got some weight in there for sure. One of the other things that we like to look at are things like these, which is 1 kg of gold, and should be about maybe 30,000 or so USD, 30,000 plus USD. So it's nice to hold. Maybe one day we'll all own one. I don't know, but today is not the day. But at least I could show that to you guys. So first things first, let's go ahead and take a look at the gold and silver prices, see what's going on. See what's going on with the gold. Yeah, Deutsche Bank, I think they laid off, they're going to lay off 18,000, somewhere around there. They're really trying to, I don't know if they're going to be able to do it. They're trying to restructure. That's going to be a mission on their part. But taking a look at our website, hey, we got a corporate retreat coming up, so I guess we'll get a couple of days off. That'll be nice. And but we scroll down a bit. This is www.silverbullion.com.sg. In US dollars, silver is right about $15 per ounce USD, and gold slightly under 1,400 again, 1,397. So it's barely hanging on to that 1,400 level. I mean, it's been a little below, a little above, but still hanging in there. And taking a look at the ratio, we're at 93.2. So that ratio is steadily climbing. But actually, it's been kind of bouncing back and forth between mid 92 and slightly over 93. So we'll have to wait and see what happens with that. But I just want to show you guys one clip about Gregor. I had an interview with him a few months back. We were in the vault, the safe house in Singapore. And typically people say they keep 10% of their portfolio in precious metals, but I want you to hear what Gregor had to say for himself. You personally, do you own physical silver?
Well, yes.
Do you own physical gold?
I would say about 70% of my assets outside of the company is in physical silver. I don't have much gold right now. I have a small amount, but that's partially because silver is so cheap right now. The gold-silver ratio, we are at about 83. I just can't get myself to buy gold when historically silver is at this low price. Once it changes, you can always sell the silver and get more gold. So, right now I'm very heavy on silver.
Yeah, Gregor, he's definitely heavy on silver. I was pretty surprised when he had mentioned that 70% of his assets are in silver. So he's definitely a guy who believes in silver, and he does put his money where his mouth is. And that's one thing a lot of us who do know Gregor, we do appreciate about him, because he stands by just about everything, if not everything he says. And that's, again, one of the good things about him. Let me see some of the questions. Standing skeleton, I'll hold it up for you. You sure about that? Let me try one more time. Okay, so here we go. You can see how thick it is. So it's not a light bar by any means. It's very close to 500 ounces. So if you want to hold it, be my guest. You can hold it anytime you want. There was one time, funny story, there was a guy that came in the shop, pretty well-built guy, and I had to ask him if he could curl those the 15 kg bars, and he could. So that was quite an experience. But something new, we're starting up a Telegram group that maybe you might want to join. It's called Crisis Tracker. It's again on Telegram. It can be found at t.me/crisis tracker. Hang on. Yeah, Crisis Tracker. t.me/crisis tracker. So if you want, you can join that Telegram group, and it's a way to keep in touch with us, and we'll put whatever news items or news pertaining to gold and silver that comes up. So we do hope you'll join that group, and we'll put that link again in our description area for you to go ahead and see what it is, and follow that link to get on Twitter to join that broadcast group. It's a broadcast group, so you won't know who else is in it. No one will know who else is in it. I mean, it's a very discreet group. So I do hope that you'll go ahead and join that. Let's see. Morning, Frank. How you doing? Morning. Oh no, you can't hold. It's heavy. Definitely heavy. Deutsche Bank, as it existed before, is dead. What is there now? A rump. Deutsche Bank. The chief. Yeah, Deutsche Bank. It's, I've been just kind of skimming through the headlines and whatnot, but it does seem by, I think, 2020, there's going to be, I don't think that bank is going to resemble what it is maybe 2-3 years ago. I think it's going to be hugely different. Peter Wilson, morning from the USSA. Hey, let's hope it doesn't get to that far, huh? But yeah, when Gregor, that clip I showed, the ratio back then was at 83, and now it's at 93. So when Gregor does stop by, please remind me to ask him about his 70% silver, being that the ratio has gone up some 10 ounces since that interview. But other news, I love your interview, Peter. Thanks. A lot of people think that's a green screen, but it's not a green screen. It's really the vault. But other news came across was Christine Lagarde. I'm pretty sure most of you are familiar with her. She was the head of the IMF, but now I think she moved over to head of the European Central Bank. And so some of the talking heads from Bloomberg, they were discussing it, and this is what they had to say. Hang on, it'll come right up. Okay. Internet's a bit slow today. Sorry about that. So they were talking about her qualifications to be the head of the ECB. So it's pretty interesting.
Let's stick with Christine Lagarde first. And Danny, has she got the right expertise, the right experience?
Well, she probably has. I think it's a pretty good appointment. Okay, she's a lawyer, so is Jay Powell, but you're a French finance minister, been at the IMF for 8 years, very capable, seems to understand how the world economy is going. I think one of the big things is probably this is a fairly seamless handover. Seems to be well understanding that the global economy is slowing, and probably going to follow on from what Draghi said. So I think it's a pretty darn good appointment. The fact that she's not an economist, I don't think is a big deal at all. I mean, we moved away from the Mervyn King and Ben Bernanke and Janet Yellen. And I think the other good thing is obviously it's a woman. We have women in lots of economics jobs around the world, but I think it's a pretty darn good appointment, and it could have been a lot worse. And the markets, I think, will read it that way. This woman's very capable, and is going to have to handle the politics very well, and that's not something.
Yeah, I'll end it there. She is going to have to handle the politics because the Euro Union, I don't know, it seems to be breaking up sometimes at times, or seems to be solid. It's really hard to tell within the Euro, or the Eurozone, I should say. And again, with the news of the EU creating that whole index system where they do intend to bypass the dollar. So it's going to be interesting to see what Christine Lagarde is going to do. Randy, where'd your I read your comment, boo, Christine. Okay, I want to show you guys two other clips about Christine Lagarde, and I know most of you have seen it. If not, I think it's an eye-opener. This was back in 2014 when she was the head of the IMF. You guys know I'm not going to let this go, right? So this is what Christine had to say back then.
We've got the old risks that are not all sorted out, and we have some new risks as well, and I'll be happy to expand on that. And essentially what we believe is needed is a reset of the way in which the economy grows around the world.
Okay, so she said we need a reset. Now, a lot of you do recall that moment that she said that she did say that we're looking at a global economic reset. This was back in 2014, and I think it put a lot of fear in people. A lot of people did go out and get silver and gold. A lot of people did look for hard liquid assets. But she's the head of the ECB now, and you have to wonder if things like this still do play a role in her decision making. And one other thing, at about the same time as she mentioned the global economic reset, she had a fascination with the number 7. So I'm going to play this clip. Maybe you've seen it, maybe you didn't, but it's also an eye-opener as to who this woman is.
The global economy and what we should expect for 2014. Now I'm going to test you numerology skills by asking you to think about the magic 7. Okay? Most of you will know that 7 is quite a number in all sorts of themes, religions, and I'm sure that you can compress numbers as well. So, if we think about 2014, all right, I'm just giving you 2014, you drop the 0, 14, 2 times 7. Okay, that's just by way of example, and we're going to carry on. So 2014 will be a milestone and hopefully a magic year in many respects. It will mark the 100th anniversary of the First World War back in 1914. It will mark the 70th anniversary, drop the 0, 7, of the Bretton Woods Conference that actually gave birth to the IMF. And it will be the 25th anniversary of the fall of the Berlin Wall, 25th. Okay. It will also mark the 7th anniversary of the financial market jitters that quickly turned into the greatest global economic calamity since the Great Depression.
Okay, so I'll end it there. Ms. Lagarde, she's also, I believe she made a comment on negative interest rates are good or can be good. So, again, I'm interested to see what you folks have to say about this. Is it a good thing that Lagarde takes over at ECB? Yeah, that's the question. She does seem like she's going to go ahead and follow in Draghi's footsteps or follow the same game plan. So why didn't Europe have a reset? That's a good question, because that was a question or a statement that she made that was literally haunting people. Is it coming today? Is it coming tomorrow? Is it coming next year? So, she did put a scare, I'm not going to say the market, but she put a scare in just the average person. Nicholas Brown, what we need is for these banksters to go away. I think that's going to be a movement that's going to keep growing. I know there's already and the Fed, but I think as things progress with the way banks are handling things or not handling things, they seem to be very much so out of touch with the regular person, the average Joe. I do think as time progresses, we are going to see movements where people really are going to want to get away from the bank. And, that's where I find it interesting where, back in when Bush II was president, he wanted everybody to have a home. I remember him saying that. And then not too long after, we had the housing crisis of 2008. He made it very, very simple for people to get homes. And now we're seeing Kamala Harris saying the same thing, where she's going to try and make it easier for people to get homes. And you got to wonder, did she not learn from what happened with George Bush? So if she's going to push something where everyone gets a home again, I think we're staring at that 2008 financial crisis one more time, if not already. PM Ruckus, she's in favor of zero interest rates, and yes, she is. She's looking at negative interest rates. The thing with negative interest rates, think about when you put your money in a bank, you have a certain interest rate where the bank pays you for the money you have in the bank. The negative interest rates, it's kind of odd where the bank is basically saying, come and save with us and pay us as well as you save with us. So it's an odd thing where if you do save with the bank, you're going to have to pay the bank to save with them. So I think in some sense, it's a way to try and get you to not save your money and to get you to spend it. Because if you save it, you're going to lose it through that negative interest rate. So it's a way for them to stimulate the economy, to get you to spend money, to get what they call the velocity of money moving, which will pick up the economy and perhaps help them get their magical 2% inflation rate number that they're looking for. And why do they want 2%? In a nutshell, they basically want some sort of inflation, because when you have inflation, it says that the money you have today is not going to be worth as much tomorrow. So that's another way for them to get you to start putting your money back in the economy to get that velocity of money again. So either way, the banks, it's their job to service the economy, to keep it at a level that works for everyone. But for you and for me, it sometimes either way, whatever they do just doesn't seem to work. Deflation would work in the sense that our money would be worth more, but banks will never let deflation happen. For the most part, they're not interested in deflation. They want inflation. So again, banksters, it's a good word. It's a good name to call them. Domo, zero to negative interest rates destroys savings. Yes, it does. Completely opposite of what we do with our earnings, causes more debt. Yeah. True. About 7,500 worth of ingot about maybe a bit more. If you're looking at the 15 kg, I think it's a bit more. PM Ruckus, show us that bargain. You want me to get a heart attack? Huh? You want me to fall off my chair with that thing, huh? Okay, hang on. Let me try and get it one more time for you guys that came in late. This is 15 kgs of silver. You can see how thick it is. It's heavy, I can tell you that much. Don't send your wife to pick up this bar if you buy one, huh? Make sure you come down and get it for her. Okay, so that's that bar. But again, a nicer one to look at is 1 kg of gold. So this here, let me make sure you can see it. It's metal ore 1 kg, which is 1,000 grams, roughly 32.15 ounces of gold. And besides the LBMA bars, I believe they're 400-ounce bars, this is what is becoming commonplace now. Instead of the LBMA bars, they're looking at 1 kg bars. So when you hear like how China is moving towards 1 kg bars and how the industry is moving towards 1 kg bars, this is what it is, 1 kg right here. Okay? So maybe one day we'll all have one, but like I said, today's just not the day. But I'd be interested to know maybe what's the largest silver bar you guys you have hiding at home. Be interested to know that. Good goal to have, Andy Z. Excuse me, Andy Z. I'm working on 10K ounce of silver and 100 ounce of gold by the time I retire. Good. That's good. I think the simplest way to do it is just get what you can when you can. You don't want to overextend or over leverage, because the last thing you want to do is have to go and sell your gold and silver just to get by for a couple of weeks or whatever it is. So just go at an easy clip, nice, simple, easy pace. Go ahead and get 1 ounce when you can. And this is definitely one of my favorite coins. It's interesting because I think the US coins are the only one, when you turn it around, it's upside down. It's the only coin that you need to flip. You need to flip vertically to have it right side up. And I'm not sure why the US Mint chose to do it that way, but every other coin, for instance, this is the 1 ounce gold maple. You can just go ahead and spin it left to right, and it's always right side up. So for some reason, just the US coin, I don't know why they actually went and did that, but I'm sure you guys are doing well stacking your silver eagles. I'm sure you're doing well stacking your maybe even 10 ounce silver bars. These are also pretty popular Canadian Mint bars. So I'm curious to know if you guys are holding these as well. Okay, so let's see. I will send my wife to pick it up. She presses 356 times. She's a strong woman. Okay, we'll all have to be nice till we keep Winning's wife, huh? Don't forget that. News Junkie, I got some 1 kg silver bars after watching Loopers. Good, main thing is you have them. Those are great to have. Standing Skeleton, it's in my wallet and not enough to brag about. Actually, I carry around 2 gram bars. Okay, gold bars, I guess, okay. You don't have them in a PES container? PES containers are good for those gold grams. How does negative rates work? Well, essentially what it is, as I was explaining, when you put money in a bank, you have an interest rate where the bank gives you X amount of money for saving with them, your deposit. And a negative interest rate is you do the same thing, you give your money to the bank, but what happens is the bank is going to charge you. Instead of giving you interest, they're going to charge you. So in a sense, it's like you're giving the bank interest for letting the bank hold your money. It's the opposite, where an interest rate should be where the bank gives you money, but a negative interest rate is where, in a sense, you give the bank money, whether it's through some type of fee or something. It'll be, I don't know if they're going to disguise it in some way. I mean, I think they'll tell you straight up it's a negative interest rate, but basically, it means you're going to lose money if you go ahead and save with the bank. And again, it's really to, in a sense, force you not to save. It's to force you to spend your money. Otherwise, your money is going to have less value. So in a sense, it forces you to spend your money to stimulate the economy, to get the velocity of money going again, and that's what they need. They need that to pick the interest rates up to their magical number of 2. Okay, let's see. Stay the course, sweep every fiat penny into the PMs. This is our moment. Yeah, I mean, that's something you should do, Alan Gold, because, like I tell people, it is an insurance in a sense where if you have let's say you bought some gold and silver, maybe you're expecting some type of fiat event, and if it happens, you have some sort of insurance because your fiat is now, it's not fiat anymore. It's converted into gold and silver. So if anything happens to the fiat, it's not going to affect your gold and silver because that fiat is now something else. You transferred your wealth. If, let's say, nothing happens, 3, 4, 5 years pass, nothing happens, hopefully gold price, silver price went up. It's so liquid, gold and silver, that you can easily flip it back into fiat and go ahead and reinvest if you'd like. So I think it's one of like the only insurance that you can get where you can go ahead and you get your premium back in a sense, where if you never use your insurance, you can sell it back. Where like let's say car insurance, most car insurance, if you never get into a wreck, you don't get pretty much almost your face value back, and for sure you're not going to get a higher amount than what you put in. So gold and silver, yeah, it's definitely an insurance that you should look at. Let's see. I'm holding and reordering silver, JM Bullion, great service. JM Bullion's good if you're in the States, yeah, definitely. But isn't storing gold and silver at the safe house also negative interest rate? I have to pay storage fees. Well, that is true where, of course, there are storage fees. But the thing is with programs like peer-to-peer, you can take out a loan against it and redeploy, your assets if you want. But also the thing is, people, they don't mind paying that storage fee because they know that if, let's say, something should happen in their home country, whether it's civil unrest, whether it's some type of confiscation, whatever it is, their assets are out of reach. And if you think about wars that had gone on, we saw Europe, they sent their gold out of Europe to the US. And so we even see this with countries where they will send their gold and silver away to a place that's safer. So, I mean, in that sense, yeah, there is a price to pay for that. But also, it's because of things like insurance. One type of insurance that we do have is called a mysterious disappearance. And what that means is, let's say your gold or silver goes missing, and let's say we run the videotape and we can't find what happened to it, it's just not there, it's still covered because of this mysterious disappearance clause. And the reason for that is because every insurance company is going to look at the vault and see their operations, their safeguards, security, things like that. And with ours, because they saw how we operate, along with the security systems, they feel very confident that nothing really is ever going to go wrong, confident enough to go ahead and give a mysterious disappearance insurance clause. So there is a price to pay. I wouldn't necessarily look at it as a negative interest rate. It's more of a service, because we are going to take care of your gold and silver. You will be able to take a loan on it if you need to. Let's see. Agree, PMs are rock solid. Savings, nothing compared. Yeah, it is true. And I do think savings is a good word, especially like for people that do find it hard to save. I can tell you, if you do buy gold and silver, it will help you save. And the reason is, once you buy it, let's say you hold it at home, maybe you have a safe or something, and it's getting, maybe you may need some cash, you're going to find yourself buckling down and being more responsible with your finances, because you're not going to want to sell that gold and silver. And the thing is, it's one small step between you and your money. Meaning, if your money was in an ATM, very easy to go to the ATM, withdraw your money, your savings depletes. If you had gold and silver, you're not going to want to sell it, so you're going to buckle down and be a bit more responsible. And that, in a strange way, it does help you save. You're going to find that it will help you to save. How strong and reliable is the insurance company? Very strong, very reliable. It's a conglomerate of companies, I believe, that are insuring. So, okay, so hang on. Hey, we have Gregor who just stopped by.
Hello.
Hang on, guys. Okay, I'm gonna put this one up so you can hear. Okay, so this is Gregor. Maybe you guys have seen him before on some other videos, but it's good to have him here. So here's some of the questions that people are asking. How strong and reliable is the insurance company? I was letting them know that we have a conglomerate of insurance companies. So instead of having one insurance company that takes the full risk, it's actually spread out between a few insurance companies. Would that be about right?
Yes, so we use Lloyd's Insurance. What's important to understand is that Lloyd's is not an insurance company, it's an insurance market. So you can look up Wikipedia and you will find the details about it. But essentially Lloyd's are reinsurance companies, they're large insurance companies that will insure each other and that will insure large items that need to be insured, such as in our case, $300 million worth of gold and silver. So essentially what happens is instead of having one company which does it, the company will go to the Lloyd's insurance market and maybe 1% goes to company X, 4% of that goes to company Y, and so on and so on. And Lloyd's essentially sets the rules what happens if one of the companies don't pay. So, for example, if we do have a claim that happens, and say we lose $200 million. I mean, it is impossible in practice, but let's say that happens, right? Then each company will have to pay their percentage of that. Now, in the case that one of these companies cannot pay, Lloyd's together as an insurance company has two types of backups. A, before you become a member of Lloyd's, you have to have a certain amount of extra money on the side in case you're short on a claim. And B, Lloyd's itself has something that's similar to, if you're familiar with our peer-to-peer system, to the sweeper fund. Essentially, each Lloyd's member has to pay some money into an additional fund to make sure that money is paid on this. So, and if you have heard about Lloyd's, you probably have heard that Lloyd's has been around for a very, very long time. And it's probably the best type of insurance so you can get nowadays, specifically because it's not just one company. It's this group of companies which are in there. And again, if you look at Wikipedia, you'll find out that back in the 60s, there was a big case where they were insuring commercial companies, construction companies, which ended up using a lot of asbestos. Then in the 90s, as you're well aware, asbestos caused cancer, so there was huge liabilities coming in. And even so, the companies which insured things back in the 60s might not even have been part of Lloyd's anymore, like the companies might not be there. Lloyd's still ended up paying these huge amounts of money. So Lloyd's is basically the most reliable form of insurance you can get anywhere. And we provide a lot more transparency than most companies out there because we are also showing which companies are actually taking up the risk. So instead of just having one company, we're saying, here you can actually see which of the companies are picking up the risks that we have. For example, Excel Group is picking up, if I got the number, 3 or 4%. Chubb is picking up a certain other amount. So it's very transparent and it's pretty much the best type of insurance you can get, I believe.
Okay. Yeah, and earlier we were talking about that one video clip where you mentioned 70% of your assets are in silver?
Oh, so for me personally, yes. I started in this business back in 2008. So that Lehman Brothers went bankrupt and precious metals started making a lot of sense. And I read Mike Maloney's book, How to Invest in Gold and Silver. And that was really one of the things that really got me interested in gold and silver. And as you might know, Mike Maloney likes silver quite a bit. And I think the arguments for silver is it's very strong. And the more I learned about the industry, the more I feel that this is indeed the case. So I've, over time, I've tended to accumulate more silver than gold, hence the name of the company, Silver Bullion, as well. But I believe right now this is especially true, and I just bought more silver myself because I think you've already talked quite a bit about the gold-silver ratio, and the gold-silver ratio is around 93 right now. It's the highest been in 26 years, probably the third highest it has ever been in history. So it's a good idea to buy some silver compared to gold. And I always say you buy silver now and you exchange it for gold when the ratio gets back to its average for the last 50 years, which is around 60, and you get 50% more gold. So I think even if you want to buy gold, buying silver right now will be the better choice.
Okay, GJ, good question. Do you run a savings program like your biggest rival in Singapore, or is that like using customers' money to run your operations?
Yes, I mean you're making a great point, and I do not want to have a savings account in Silver Bullion because with Silver Bullion my aim is to provide the safest form of storage possible, and in order to do that, I very much believe that the customer ought to be the owner of the bullion from a legal sense. Because if you own the bullion, then I cannot, as a storage provider or as a bullion dealer, I cannot take that bullion and do some things with it like lease it out or use it as inventory. So the reality in this industry is that a lot of companies, especially if you run something like savings account, which by definition is an IOU, what happens with a savings account or similar models, really most of the ways gold is stored nowadays, companies allow you to buy, say, $50 worth of silver. And it sounds easy, it sounds convenient, but what it means ultimately is that whoever you give this money to, he's supposed to buy $50 worth of silver or $50 worth of gold, and then basically have an allocated or fully allocated type of system. The problem with fully allocated, it's the way it's normally used, is that the gold or silver is not in your name. It's in the name of the company which you gave the money to. So in a sense, it's not that different from a bank, because that company is owing you, say, 3 ounces worth of silver, but it's on their balance sheet. So they can take that money and they can use it any which way they want. So the typical two scenarios is that a company might take that and might lease it out to somebody else. And right now I think you can earn about 1.5% or something like this by leasing out the gold. The problem with leasing out, and I firmly believe that what happened with the Federal Reserve gold, the German gold that was stored with the Federal Reserve in New York, which happened about 4 or 5 years ago, where Germany wanted to get the gold back, and the Fed said, no, we cannot do that for 7 years. And the reason is when you lease something out, you're essentially leasing it to an entity which promises you to give it back to you. But what they will do is they will take that gold and they will sell it. And then say by this date you'll get it back. And normally the company which does the most leasing are actually gold miners, because the idea is, you're a gold mining company, you're saying in 10 years I'm mining this stuff anyway, I'll give you the gold back, but in the meantime, why don't you give me or lease me your gold, I'm paying you a certain interest, and the gold miner can then sell that gold and use that gold to basically run operations and build the mine. So that's one problem when you have a system where the customer doesn't legally own that gold or silver. The other problem, as you actually mentioned, is that you might be a small company, but if you can use the money that say goes into a savings account and then you use it as inventory, then you can make yourself look a lot bigger and you can have a lot of inventory in there, even though it's not your inventory. And I think it's the wrong thing to do. It's not the way I want to run the business, and that's essentially why when it comes to us, you actually have to buy a full bar of gold or a full bar of silver or a parcel, because when I sell you that parcel, it's a uniquely identified number. I'm selling it to you with an invoice, and that invoice is essentially a transfer of ownership. It's no longer on our balance sheet, so we cannot do all of these things. And because you're now the owner, under, in this case, Singapore jurisdiction, it's basically sitting there for you, and you can do an audit, and you can make sure that basically the system is clean and well running. And by the way, another really powerful thing about invoices in Singapore is if you falsify an invoice, it's a criminal matter. It's not a civil matter, it's a criminal matter. So it's like stealing. So again, the law is very much in favor of the customers. And I believe in building systems which are so transparent that we cannot cheat. And through that, we basically build the trust.
Okay, another question from Peter Wilson. Can 8,000 ounce in bars coin bullion be shipped from USA to Singapore for external storage from the US just in case a drastic event happens?
Yes, you can ship it out. The problem is you probably would want to do it before a drastic event happens. Now, if you want to ship, there are essentially two ways you can ship bullion. It is possible for smaller amounts to use companies like Federal Express or UPS, but you need to have a company like us that actually provides additional insurance. So UPS might only insure it for $500, and they might also have rules against shipping gold. So in the US, it's easy to ship because you can use the US Postal Service, and the US government more or less has made that possible because of tradition. But once you ship internationally, it gets a lot more complicated. So you can still use a commercial shippers as long as you're dealing with a company that can provide the additional insurance. So in our case, our insurance with Lloyd's actually allows us to get some insurance, I believe up to $100,000 per packet that's being shipped. If you need to ship $200,000, then it might be 2 UPS packages. But you would have to come to us first because we have to contact UPS and get the additional insurance. The other way of shipping is to actually, especially for larger amounts, is to go to secure logistic companies. These are companies like Brinks in the US, Loomis, and so on, C4S, and these will actually do wall-to-wall armored transport. So that's also possible. Before you ship, so in our case, you're welcome to ship. We can take care of all the paperwork and details. You just have to look at if it makes more sense for you to ship it or if it makes more sense for you to sell locally and buy back here. And depending on what you did with your gold, you might also consider whether you're having a potential capital gain or capital loss. So sometimes it makes more sense or less sense also from that perspective to buy it and sell it instead of shipping it. But if you ship it to us, it will arrive, we will go through the testing process, we will parcelize it, you'll get photos of everything. And I might add, oftentimes, people might have gold with some other provider and they never get to see it. And, when it comes in, we actually get to see it. And you wouldn't believe how many times we have customers who might have bought Maple Leaf coins, say, in 2012. And by the time we get it, we have 2017 coins. So whatever they bought back then, it definitely wasn't allocated. Because with the coins you can tell what the year is. So yes, we love for you to transfer the bullion to us, and we'll be testing it, parcelizing it, and you'll get all the details for it.
Okay, another question from PM Ruckus. Isn't having 70% in silver rather extreme? Most people say just 5 to 10%, and someone says you should be having 100%.
Well, you see, I very much subscribe to what Jim Rogers is saying. And Jim Rogers is saying that, it's not necessarily a wrong thing to put quite a bit of money into one or two things, as long as you understand them. And in my case, the reason I like silver and gold so much is because I believe I understand it, having been for a long time. I truly believe they're way undervalued. And you have to understand, I was sitting in the trading room of Commerzbank, the second biggest bank in Germany, in 2008, and I saw all the aftermath of the 2008 financial crisis. So when I saw that, I really started having big doubts in the financial system, in the stability of the financial system. And the reason why we had that crisis was too much debt, too much leverage, and too much interdependence between the banks. And all of these things have gotten worse. So I expect we're going to have another big crisis, and so I feel very uncomfortable, especially now, putting my money into equities. If you put it into bonds, you don't get any return, which means there are not that many asset classes which make any sense, and I think we're going to get into a major financial crisis. So based on that, I want to put my money into something very defensive. Now, where do you put it? I mean, I could put it in cash, but as you know, cash devalues every year by, say, 2-3%. If you look at something like gold or silver, and if you look at the price of silver back in 1913, when the Federal Reserve was created, with the mandate, by the way, to keep the value of the US dollar strong, and you look at today's price of around 1400, you would find that every year gold has appreciated by 4.2%. Now, some years it will go down, some years it will go up, but you just take those two numbers, around $18 back then and around 1400 now, and you will see that 4.2%. At the same time, the US dollar has depreciated by about 3.2%, also the last 115 years or so, or 105 years. So I feel putting your money into gold, therefore, it's not so much like putting all your money into a big investment. It's something which long term is going to be very safe, and definitely safer than putting it into cash. And if it comes to silver and gold, right now I feel that I much rather put my money into silver because the ratio between gold and silver is so high, meaning silver is so undervalued. Once that ratio drops, once it goes back, into the 65-60 range or something like this, I might say sell half of my silver and go back into gold, and I'll be getting quite a bit more gold. So that's essentially my rationale. But I firmly believe that you should do what you think makes sense on your background, and if you know certain stocks very well and you know the details, then you might be right. You might be making a lot more money with that stock. But overall, I'm quite pessimistic about the equity markets, and I understand silver, and I feel comfortable this way. So it works for me. I'm not saying that's what everybody necessarily should be doing.
Okay, yeah. Some people feel like gold may be getting a little bit out of reach, and so I wanted to share this clip from Robert Kiyosaki, what he had to say if you feel gold is starting to get out of reach.
What's your advice if I asked you for a 20-year-old investor, let's say a 40-year-old investor, and a 60-year-old investor?
I always say the same thing that Jim says. I say it on Laird Capital. I'm on Fox a lot. Right now, people say, well, I can't afford gold. Well, buy silver. Silver is so undervalued today. I can buy silver for $2. I can go to a coin dealer and buy a dime for $2, 10 cents for $2, get that. So everybody can do something to get what I call real money, not fake money. In 1971, the US dollar became fake when Nixon took us off the gold standard. And as I write about in my book, Fake, in 72, I was flying behind enemy lines, and I went to buy my first gold. The trouble is, Americans don't know what gold was. Plus, in 72, I finally bought my first Krugerrand for about $50 in Hong Kong, and I became a criminal because I had to smuggle that Krugerrand into the United States because it was illegal for Americans to own gold. Thank God in 74 or 75 they made it legal again. But that Krugerrand, I paid, let's say, $50 for it. Today it's worth $1,500. Now, who was smarter, the guy who saved money or the person who saved gold? And silver's in that same category right now at about $15. So anybody says I can't afford gold or silver, I don't know what rock they're living in.
Right.
But get real stuff, not fake stuff. That's all I'm saying.
So a cup of Starbucks coffee or a silver coin, right?
Okay, so as you can see, Gregor and me, we don't have any Starbucks here, so it's definitely
I'm guilty
silver
of drinking Starbucks.
silver for us. But they did ask a good question. What do you think is going on with the ratio? Why isn't silver keeping up somewhat with gold?
When I first got into this business, I guess I started off with a big lesson, which was in 2008, because when I was reading Mike Maloney's book back then in 2008, silver was still trading around $13. But then as the crisis unfolded, it kept on falling and falling. It went down to $9.50. And that's when I said, oh, yeah, I should go out and really buy some silver. And that was in Germany back then. I already moved to Singapore, but funnily enough, Germany sent me as an expat in my own country in Frankfurt. And I said, well, $9.50 is so cheap, I'm going to go buy some silver. There's not much I can do wrong. And I went to the bullion store in Frankfurt, the biggest one I saw there. And they said, oh, we don't sell any silver, we only buy it. That was weird. So I went to another one, and they told me the same thing. And then I really started worrying, saying, what's going on here? And I ended up making it a mission to get my first silver somewhere. And I had to go through 14 different bullion dealers and banks in Frankfurt and the surrounding area. And I finally, and this is a funny story, I ended up getting a 1 kilo silver bar, a rare silver bar, at the gift shop of the European Central Bank. And they weren't selling silver normally. I just told the story to this guy, and he said, come back in 2 days, I'll give you a 1 kilo silver bar. And I had to pay 19% sales tax in Germany. Then I brought it to Singapore. In Singapore, I had to pay another 7% back then. That was before I made it tax-free. And, I just tried to understand how it all works. But the key thing to note here is the paper price fell to $9.50. And that's what's being reported in the news, and that's what you're supposed to be able to buy silver at. But in practice, nobody was selling it at $9.50. At the time, if you go to eBay and you're trying to buy a Maple Leaf or an American Eagle, they were selling at $35. So, and that was really a big eye-opener, because I realized when you have a financial crisis, you're going to have two different prices. You're going to have, say, paper price, and you're going to have the real price of silver and gold that somebody is actually willing to sell to you. And that sort of was that insight. And since then, 3 times since then, we had cases where we had silver shortages. And the funny thing is, a silver shortage normally happens when silver prices crash. So I forgot the year, it might have been 2012 or somewhere around there. Silver fell from about $28 down to $22 in the span of, say, 10 days. And it was very clearly manipulated, because it starts on a Monday morning, Asia time, around 6 o'clock, when the markets are really thinly traded. And it will keep on crashing, and there was no reason for it, other than the fact that silver is the smallest large commodity. It's the easiest one you can move the price to if you're really keen on moving it down in this case. And I think what happened is they crashed the price so much that also smaller guys, which are having long position in the future market, basically got margin calls and got kicked out. And then when it ended up going down to 22, 23, these people covered their position and they essentially made a whole bunch of money. But the reason I'm telling all this story is because the paper price of silver has very little to do with the real supply and demand. Because in our case as a bullion dealer, whenever we are in a situation where silver falls way down, the demand goes way up. We are having a lot of customers which are coming to us and wanting to buy silver, but the price keeps on falling. So the market mechanism doesn't work, because we are having a good which demand is going way up, and the price keeps on going lower. And so what happens is we get shortages, because suddenly, and you can look this up, with the US Mint several times had to stop taking orders for American Eagle silver coins because there was too much demand. And it's typically when prices start crashing. And so you can see that the physical buyers are all coming in, because they're saying, oh, this is a good opportunity, prices are going down. And yet the prices don't care at all, because it's not determined by physical demand at all. It's determined by people in the future market buying and selling. And the thing you have to understand about a future market is that you can come in, you normally have 900% leverage, so you can come in and say put in $100 and you actually get $1,000 worth of position. And you can do that
as a short position, which means you're borrowing non-existing silver and you're selling it in the market at 900% leverage. So if you are, say, a banker or a guy in the future exchange and you got $100 that you want to short the market with, that $100 becomes $1,000 where you're borrowing fictitious silver to sell in the market. And at some point, you have to close your position, meaning we have to buy it back. But basically, you got $1,000 of downward trend. And now you take a guy who actually goes and buys the Maple Leaf coins, and he's got $100. Well, he's only get $100 worth of actual silver. And if that dealer then hedges the position in the future market, he'll be hedging $100. So you see how unfair it is. You get a net $900 in downward move. So in practice, the physical supply and demand, and this is a similar story, not quite as extreme, but it's also in gold, along these lines, has very little to do with the actual price of gold and silver, because that's determined in the future markets, essentially by bankers and traders who just move paper numbers around. And that explains a lot. Once you understand this, you start to understand that the price of silver and gold doesn't necessarily reflect the actual things that we see in the physical market and that we see on the ground. And that also partially goes back to that question, why is the gold-silver ratio so high right now? What's the reason for it? There's no good reason other than the prices are determined in the future market by these people. And I guess they're buying more gold because that's the first instinct. So there's a little bit more trouble here and here. Let's buy some gold, and they kind of forget about silver. Then when things go really bad, silver ends up sort of catching way up. And that's when you see the ratio is going to start coming down. And again, that's why I keep on repeating, right now silver is just ridiculously cheap. And just makes sense to stock up more on silver. And even if you're a gold bug, stock up on silver now and then switch it for gold, because silver will not become worthless. This is not a stock which is going to go to zero. And things tend to revert to some means. And again, the silver-gold ratio throughout history used to be 15 or 16 to 1. That's what it occurs to in nature typically. And now we're at 93. So can it go to 100? Yeah, sure, maybe. But it's going to have to come back down at some point. There's not much you can go wrong.
Okay. Another thing that was in the news late last week was Trump's appointment to the Fed board, Judy Shelton. She had a pretty interesting comment. I just want to share with you what she had said.
We could offer a Treasury debt instrument that included a gold convertibility feature. Why gold? It doesn't have to be gold. But since central banks in over 100 countries already hold gold as part of their international reserves, it seems a good, neutral reserve asset. And in my mind, a way to avoid political resentments. So, let's imagine a U.S. Treasury instrument that works like this. On the day of maturity, the holder of the Treasury bond would be entitled to receive back either the face value of the bond or a pre-specified amount of gold. Now, we'll say that again. The day the bond matures, the bondholder gets back either the face value on the bond or else a pre-specified amount of gold. It is their option.
Okay, so Gregor, I'm curious to know what's your opinion on that. And I think looking down the road, is there a chance where the U.S. may have to expropriate gold again in order to fund this convertible treasury to gold program?
Maybe the first part, I think it's a cute idea, but I think it's completely ridiculous at this point, because the U.S. left the gold standard. What she's sort of saying is something like you can convert your U.S. dollars or your bonds back into gold. Well, the U.S. couldn't handle it in 1971 when the debts were so much less and they had so many precious metals in storage. And they had to abandon it because countries like France and so on said, take back your dollars and give me the gold. Mm. So the idea said it could be done now with any, with the ratios, and they are so much worse. It's somewhat ridiculous because, to be honest, if that happens, why would the Chinese not take the $1 trillion
dollars worth of bonds they have and convert it into gold right now. And the US doesn't have nearly enough gold to ever be able to cover that. I mean, gold would have to be, I don't know, 15,000, 20,000. You know, it doesn't make any sense. So I don't know whether that story is there to maybe reinforce the ideas that somehow the US could do it, but it's completely nonsensical from a practical point of view. And I would just like to add to this, we are getting a lot of people here which you know, if you can sell gold at spot or slowly below spot and between private parties, there's a lot of price, a lot of deals that are happening, especially with Chinese, which are off the market, where you know, like $100 million worth of gold. I know some of these people which are buying supposedly for Chinese jewelry companies $100 million worth of gold. These numbers don't make sense to me. They're just too big. And I think it's just the Chinese government, which essentially is trying to buy gold, you know, at good rates whenever they can. And so China is accumulating gold, and as we all kind of know, the real number is probably a lot higher than what they like to tell people. And if you know China, gold goes in and never comes out. It's illegal to take gold out of China, but they're very happy to take it in. If you're a jewelry company and you have gold jewelry being made in China, you actually have to send the gold to China, and then you get an equivalent of amount of gold out, but you will never get any net gold out of China. So say China is in a situation where they're slowly trying to get, you know, reduce their holdings in US dollars and buy a lot of real assets, whether it's a mine in Africa, whether it's gold, whether it's other things. So within this context, for, you know, the Fed to say we make all of our treasury bonds redeemable in gold, it's just sort of it would never work, because if somebody even takes 1/10 of that and asks for the gold, the US would already be defaulted. So that's part one. Part two, I do think so, that there's a real possibility that there might be a gold nationalization again. And what I would look as, you know, a precedent, of course in 1933, as you probably know, the US nationalized gold already. They took it, I think it was around $25 or so, or $26 that it was nationalized on by Executive Order 6102, I think, right, under Roosevelt. And they did it back then because the government needed more money to do public works. The US was in a depression. They wanted to build the Hoover Dam and other big public works, and they needed money, and they knew that if they just started printing money out of thin air, then people are going to go and ask for the US dollars to be converted back into gold, and that would basically be a big problem for the government because they didn't have enough gold. I mean, a gold backing keeps the government honest in that sense, that they can't just print gold. And they wanted to print more money. So the choice was either for us to print more money, we either have to stop backing the dollar with gold, or, hey, why don't we just make it illegal to own gold? And that's basically what they did. They just make it illegal for American citizens to own gold, and then forced everybody to turn in their gold and gave them $25 or $26, and then revalued it at $35 shortly after, and they used that extra money to build the Hoover Dam and these other things. Now, whether it made sense or not, that's for people to debate. Of course, the Hoover Dam was definitely a good investment, but it's a precedent. And the other thing you should be aware of is what happened in Germany post-World War I. So Germany lost World War I, and the French, you know, said, "Oh, you have to repay us for everything you ever did," and so on and so on. And you get this crazy amount of gold that you have to pay us for you know, the wars that you lost and so on. And it essentially bankrupts Germany in so many ways. And Germany itself, they actually printed a lot of money to fund the war, during the war, which is a lot of people don't realize, but they didn't borrow it, they just printed money. And they thought if we win, then we just, you know, get the money from France or whatever. But they lost. So essentially, people started realizing that there was way too much money
and that money maybe isn't worth all that much. And so this trend started where the guy selling his sausages said, well, I'm not so sure this money really worth it. I'm going to charge a bit higher. And as people start seeing that the sausage is costing 1.5 marks now instead of 1 mark, they kind of go, oh, I see a trend here, prices are going up. Maybe I just buy more sausages now or something else, and I find a way to keep it in my cellar. So people started buying more sausages, which then made the sausage buyer seller kind of say, Jesus, demand really goes up here, and I'm not sure that I'm selling at high enough price. Why don't I charge $2, 2 marks for it? And since that fed on itself, and we ended up having hyperinflation, right? It went to crazy lengths. I mean, what used to cost 1 mark ended up being 1 billion marks. And throughout this time, people who had some money in actual currency, life savings became worthless. Life insurances, I mean, you couldn't even buy a coffee with your life savings at some point. And again, there's some really interesting information on Wikipedia about this, but it essentially destroyed the whole German economy. People had raises twice per day, once in the morning, once in the afternoon, and they were paid twice. And if you were a factory worker, you would ask your wife to come around 1 o'clock when you get paid, and they will throw some money down to the wife and say, buy anything you can with this thing, because by tomorrow it's going to be worth half. And so you can see where a failed currency is heading or would go. And the way Germany got out of it is they didn't have enough gold in a meaningful way to really back it by gold, but they just said, okay, let's take all the German government's assets, the land, whatever factories they have, the military equipment or whatever it is, and we just split it up and we say, here's a new currency and it's backed by these things. And then shortly after, it kind of worked, but then shortly after they managed to get actually hold of some gold, and they created the gold mark, which essentially was backed by gold, and people trusted it again. And that's how Germany got out of hyperinflation and ended up fixing things. And that's why in Germany, nowadays, Germans they tend to be some more conservative guys who don't believe in money printing nearly as much as the Italians do, which love it. See Mario Draghi, for example, being Italian. And because they remember that. There's still people alive who have this. And I have this 100 billion German D-Mark note back from 2021. And it was just printed on one side because it wasn't worth printing it on two sides. And what they would do is they would have the stamp. You would stamp the bill, and it will be a times 100 bill. So if you have 100 billion now, you use that stamp and you're going to have 10 trillion. That's how worthless this all became. So within this context, long story made short, I can see in the near future, not in the near future, there's a potential that the US might nationalize again, not because they cannot print money, they're printing money all the time, but because people might lose trust in the US dollar. And when I'm saying people, it's not just US citizens. You take China, so the dollar is used throughout the world in so many ways. And as debt keeps on increasing and unfunded liabilities, are way out there and so on, at some point these guys might increasingly say, I don't want US dollars, I want something else. Yeah. Maybe that something's going to be gold. And, if it's like people watching a movie. If one guy runs out of the movie theater, people are just going to go, maybe he's running to the bathroom, doesn't matter. If 3 people run out, people get a bit worried. Now if 7 people run out, chances are there's going to be an 8th person who has no idea why, but he's going to run out too, because maybe there's a bomb or a snake or something. And if the 8th guy runs out, the 9th, the 10th, the 11th, everybody else runs out too. So it's not a matter of, something that you can calculate. It's not a matter of economics or mathematics. It's a matter of psychology. It's like, are people going to suddenly feel that they have to get out of the dollar and somewhere else? And that's a psychological thing, and you cannot predict it. Or at least I cannot. I don't think anybody really can, otherwise they would be billionaires. Maybe people like Jim Rogers, have a bit of an inkling about it, but he himself also says he can't really predict it. It's psychology. But it can happen. We should just assume in a prudent world that something like this is going to happen, and that's again why you should be owning gold or silver, especially silver right now, because
things mentioned earlier, and you should be storing some of that outside of U.S. jurisdiction.
Yeah. Yeah. Okay, got a question from Min Chin Xiao. The SBTV, I know this might have never happened before, but at that moment of, say, real fast downward movement, that shortage happened, what would you go by to establish a bid-ask price?
So I think it's a question of how long it takes. What we tend to do is that, from a dealer perspective, there's a certain delivery time. If I'm ordering silver right now, say for example, it will take 5 to 7 days to arrive to me on the dealer. So in our case, we got about $10 million of gold and silver that we have in buffer. As we are selling that, immediately we're reordering, and say it takes 5 to 7 days. Now during our crisis, that increases. It will go from to 2 weeks to 3 weeks to 4 weeks to 5 weeks to 6 weeks. So our policy is once delivery times take 6 weeks, we stop taking orders, because I don't want to promise people that I can lock in that price and not be able to deliver, because for you to take physical possession of something or to have it sold to you with an invoice at a point in time, and you having a pre-order which will be a fulfillment once it arrives, they're not the same thing. And when you go into a crisis like this, what I noticed is after 6 weeks, normally that's when the US Mint and these other institutions will actually stop accepting orders themselves. So essentially for us, we will stop taking orders because we are not that confident that we'll be able to fulfill it. Now, so far, after a while, the liquidity will come back, because you also have to realize sometimes the problem is not that you cannot get any silver. Sometimes the problem is that the bottleneck is, say, the US Mint or the bullion refiners, that they cannot take enough silver and convert it into actual bars and so on. But having said that, the overall stocks of silver are not very high either. So, but now if it becomes a bigger issue, if it becomes a prolonged issue, a real crisis, say a 2008 crisis, which doesn't get papered over with bailout money, then probably you are going to start seeing a separate price. Then there's going to be, the price is going to be whatever price you can get the actual gold and silver from. And over time, people are going to start hunting for whatever the cheapest price is they can get it to get the real gold and silver. Because at that point, you have to be very careful. That's when you buy stuff through eBay, and the guys which have the fake gold bars, could make a killing to people who don't know how to test it or might end up getting duped. So, but essentially, I think that what would happen is it might very well be bullion dealers which are going to be looking at what is this guy selling it at. And the reality is, if some guy is selling it really cheap, the next bullion dealer will just buy all the gold again from that bullion dealer. So I think it will sort of, there might be a real distributed market coming for people selling that gold. So that will be my guess, but I don't really know. So far, the reason why the paper markets can dictate the price of gold is because so far when if the price says it's 1,400, I can pick up a phone right now and order a large quantity of gold at that price. So as long as that works, that will be the price. If that breaks down, then I assume it will be a distributed sort of system, people hunting for the lowest price and whatever that is. The beauty nowadays, we have the internet. So I think there will always be some price being done. It's just it might not be a price where you can get really big amounts of gold or silver traded.
Okay. And there was some little bit of a controversy going around on the internet where it was being said that 100-ounce silver bars may be too large. They may not be liquid enough. What's your take on that?
Well, let me put it this way. I think it makes sense for you to have a little bit of gold and silver, in your house, and if you need to use it for some practical purposes, it's good to have it in coin form. But I don't think you have to have all of your silver in coins. It makes sense at some point that you
store it in larger bars. I mean, personally, I like the 15 kilo bars because the premium is lower, and I just kind of like the size. You can still lift it pretty easily. And it's easier to count as well. I mean, it takes a lot of time to count these coins, so especially if you have a lot of them. I like that side. I think there's a point to be made for coins. I think there's a point to be made for bars. But if you're storing large amounts of silver and gold, I think it makes sense to have some of the bigger bars. And having said that, sure, why not have 1,000 silver maples?
Yeah. Another question they have here, G-Man, would a shortage likely occur with gold or silver with these suppressed prices?
It depends on how many people are going to buy gold or silver. So right now, I can pick up the phone and I can buy $50 million worth of gold at current prices. So we don't really have a shortage right now. And it's partially also because so few people care about any of this. I mean, most people put their money into equities, and there's a ratio. There's you can look up how much margin is being used right now in the New York Stock Exchange. And margin basically means people borrowing money to buy more stocks. And that number is incredibly high right now. I mean, it's if I remember my numbers correctly, it was about 300 billion back in 2008 before the crisis. It's around 500 billion now. So people are putting way too much money into equities, and I think it's going to have a big crash at some point, because I don't know where the extra money is supposed to come from to push this higher, despite us printing so much money. And with that being the case, I'm sorry, I forgot my thought. The original question was what?
No, if there's a hang on, G-Man, would a shortage likely occur with gold?
Oh, with the suppressed prices. Right.
Yeah.
Sorry about that. So, essentially, my whole point, it was sort of like a distraction, is even if 1% of these people who buy these equities know where to redirect and take that money and buy gold and silver, we will have huge shortages. But the thing is, almost none of them do. So it's really a matter of how much of that money, which is now all in equities, is going to start flowing back into physical gold and silver. And once that flow starts, you can start having physical shortages very quickly. But you will have shortages in silver much more quickly than you will have in gold, because silver is so cheap. Because silver is so cheap, you can need very little money to buy a large amount of silver right now.
Okay, and yeah, big news with Deutsche Bank. Or have you been following what's going on?
I just read the Spiegel. So I'm originally a German citizen. I gave up that citizenship and became Singaporean now, but I still read German news. And yeah, also just the articles that in the Spiegel that they're going to probably let go 16 to 18,000 people in Deutsche Bank. You might also know that there's talk about Deutsche Bank being merged with Commerzbank, which is the bank I used to work with, 04. So, yeah, all these things are happening. I always like to re-explain to people that when you give money to a bank, it ceases to be yours. And the bank is just owing you that money, and they can use that money for all kind of purposes. And oftentimes these purposes involve investing in things, and things might go wrong. And so we got big banks like Deutsche Bank, which makes you wonder, why is there any this trouble in the first place? We are not in a financial crisis right now. The stock markets are going all up, right? Why are they really in this kind of trouble? And what's going to happen when the stock market really is going to crash? And these guys, if they have long position in it, I don't know if they do, but I would expect news like this to be happening after stock market crash, not ahead of it. So I just feel the whole situation in the banking world overall is not solid at all. Yeah. And that's why most of my money is in silver, physical silver and gold, and I have money ready actually to short the market. That's where some of my other money is. I'm just waiting. So I'm quite pessimistic, and I what I can also tell you is I grew up in Italy for 10 years, and I know Italian banks, and Italian banks are much worse than German ones. Things are really bad there because real estate prices have fallen so much in Italy, and most of the mortgages that Italian banks hold are, if you mark them to market, if you take the real value of the real estate that is backing these loans, they would all be negative, and the bank essentially will be close to bankrupt. So there's so many hidden skeletons in all the system, which is why we created Silver Bullion in the first place, to create an honest way to keep physical wealth safely in a jurisdiction outside of Europe and the US. And Singapore is the best place I found for this.
Yeah, okay, another question by Min Chin Xiao. How well do you think Singapore will do overall? After all, you guys and Jim Rogers have chosen Singapore as your base now.
So I lived in the US 12 years. I moved back to Germany for 3 years, and I was working there. And I was paying almost 80% taxes. It's crazy. It just doesn't make any sense anymore. And when I say 80%, that includes my pension payments I had to with the German government. But it's going to bankrupt in 3 years anyway, apparently. So by the time I retire, there's no money there. So the good thing about Germany is you get 6 weeks of vacation. So I did 2 trips around the world, and I looked at different countries, and I found Singapore. And if you want to understand Singapore, I really, really highly recommend you read this book called From Third World to First World by Lee Kuan Yew. Lee Kuan Yew is the Prime Minister of Singapore, who basically built modern Singapore. And it's almost like an instruction manual on how to build a very successful city-state and how to govern in a way that is practical and clean and really, really works very well. And I read that book, and it was one of the most interesting books I've read in my life. And after reading that book, I said, I'm leaving Germany, I'm moving to Singapore. And the reason why Singapore is going to do so well is, because they already have created a lot of wealth, but the difference with countries like, say, Dubai, is that all this wealth is created because of entrepreneurship, because of industry. The Singapore government's attitude is, it's my job as a government to make sure that you as a citizen have a good education. And Singapore is normally ranked number 1, 2, or 3 worldwide for education. And it's my job as a government to make sure to create the conditions for businesses to create jobs. So the government doesn't try to create jobs, that's not going to work. But they make the conditions for businesses to create jobs. And it is your job as a resident to find a job. And I'm going to tax you very little, but you're not going to get unemployment help. You're not going to get all these other things. You're not going to get that much of the wealth transfer, which has been crippling Europe to such a big degree. And that starts with a healthy sort of basis. The government believes that 10% of the population is always going to do well, no matter where they are. There might be North Korea, and these people are going to figure out how to live well. And then 10% are going to be screwing up no matter what. They're going to become alcoholic or whatever. 10% of the population is going to have problems no matter what. And then 80%, that's what you have to make your laws to. And you have to make these laws and give people the right incentives. And so Singapore now is one of the richest countries in the world. My father-in-law, he used to be a bus driver, yet he owns basically a condo which is worth $500,000 or so, and he's got $120,000 in his retirement fund, and he just was a bus driver. And so this wealth, even though there are these extremely rich people, it's also very well distributed, and the government makes sure everybody gets a really good education or has the choice of ability of getting a really good education. So, and so Singapore government, when it comes to figuring out how to be relevant in the world, they're very, very pragmatic. They would say, for example, well, let's see where we can play a role. And for example, they would say, well, let's take stem cell research. They would say, okay, we're a small place, but we've got money, but there are a lot of potential in stem cell research, which is not being realized because of say, philosophical or religious or moral reasons in various countries. We think it makes sense to cure cancer and research into this. And since they go out and they try to get the best researchers worldwide, offers them 3 times the salaries they can, say, get in the US, brings them to Singapore, builds something they call Fusionopolis, which is basically this big research area where you have different disciplines with supercomputers and so on, and put in as much money as is needed to create world-class research in stem cell research, and then hopefully in 5, 10, 15 years, find some cure for cancer, and then basically could get well. It's a win-win for everybody. So that's what they do. And you might not know this, but for example, Singapore is it's one of the largest refineries in the world. So they have an island where oil tankers come in and discharge the oil, and it's being refined in underground caverns to store the oil, and then it gets moved into the other port. It's got 3 times more tourists than Rome does, in Rome, Italy. It is, I think, the 3rd or 4th largest gambling place now because it's 2 huge casinos. It's one of the biggest shopping areas in the world. It is 10% of semiconductor wafers are coming out of Singapore. It's the 2nd biggest or 3rd biggest currency trading hub in the world. They are so diversified. There are so many different things going on here. Precision engineering, technologies. They're trying to go more into satellites now. They're really big in air, or Boeing, all these companies are over here. Singapore Airlines, very big, well-known airline. So the attitude basically is work hard, work smart, and figure out how you can have a role in the world. And this is a kicker, most people don't realize this, Singapore is the biggest foreign investor in China worldwide. So there's a lot of wealth there, and Singapore is a very neutral company, kind of like Switzerland. It's not going to ally itself with the US, China, or Russia. It's going to be a neutral party between all of this. And maybe my last point is, which a lot of people don't realize, is Singapore actually has a very strong military. It's just funny being such a small country. But you have to have a 2-year military service here. You have to go back to the military until the age 40. And so little tiny Singapore can call up an army of 950,000 within a 2-week time period. The Air Force is about the same size as the German Air Force. And it's a big country. The neighbor here, Malaysia, they have a standing army of maybe 60,000. So Singapore is not just, Singapore is considered a medium-sized military, even though it's more or less a city-state. So it's just this incredibly amazing place. And I really encourage you to read about this book, From Third World to First World, because it made me fall in love with Singapore, actually. It's a place where government actually do what's good for its people long-term in a very pragmatic and intelligent way. So during our crisis, Singapore will be doing, everybody will be suffering, right? Singapore does a lot of trade. It's the 2nd biggest port in the world, or busiest port in the world. But the reserves here are so high and everything is so good that Singapore would end up doing well throughout this. And they will never nationalize gold because they already are rich. They don't need to take it. But much more importantly, the whole economy and everything Singapore created is based on trust. We've got something like 150 international MNCs, multinational companies, having their headquarters here. Because in Asia, there's a lack of trust in a lot of countries. What's intellectual IP protection in Vietnam or in China or in Thailand, right? You never quite know. But Singapore is safe. Singapore, everything works. So people come to Singapore, and it's everything based on trust. If Singapore ever were to nationalize gold, they would essentially betray their trust, and it would be economic suicide. So Singapore will be the last country in the world to, say, do a nationalization, which is why Singapore is such a good place when it comes to storing gold.
Okay, so I think that would answer Shane Clement's question, where Singapore has national debt. Okay. Are the private possession laws so strong in Singapore that there is no chance of precious metals held there being nationalized, especially with regards to foreign holders?
Okay, there's another big thing to understand here, because there's this misconception that Singapore has a lot of debt. When I say misconception is, if you go to the CIA website, I believe Singapore's per debt ratio is shown to be very high. Mike Maloney was also pointing this out. Unfortunately, it's quite wrong. You can go to Singapore government and they're actually writing about this. So, and the reason why I'm saying it's wrong, it's not that the debt isn't there. It's just that you have to understand what it is. I mentioned my father-in-law and how he ended up having so much money, even though he was just a bus driver, trying to raise 3 kids and his wife not working, right? And bus driving salary is not that high even in Singapore. The reason he has so much money is because your income taxes are very, very low here. But you have to put 20% of your money into something called CPF. And your employer has to put 16% of whatever you're earning per month, also into the CPF. So you have 36% of your gross income going into this fund. And you can think of this fund as sort of being like an IRA with a lot more flexibility. Because if you want to buy a home, you can use the money in that fund to buy the home and pay your mortgage. So right now, I'm an employee in Singapore at Silver Bullion, and I'm paying into the CPF fund, and I'm using that money in the CPF fund to pay for my mortgage. So, but some of that money has to stay in the fund, and the government guarantees you that they will give you a 5% return minimum, up to about $50,000. So that all Singaporeans basically get a nest egg being built up. And this money goes for investment to the three big sovereign wealth funds that Singapore has. One is called GIC, one is called Temasek, and the other one is MAS. And between them, they have something like 700 billion US dollars, which is a huge amount for a country which has about, say, 4.5 million citizens. So the way that this money is going from the CPF to the sovereign wealth fund for investment is by basically buying a government bond. Now the funny thing is, in most cases you can't even buy these bonds on the market, because everybody would love to get a 5% return from a AAA rated company like Singapore, because Singapore has the highest credit rating in Asia and is one of the highest worldwide. If they would have so much debt, they wouldn't have that rating, right? The reason is that the rating agencies understand what the debt is. It is basically retirement money going into the sovereign wealth fund, and the sovereign wealth fund then invested, and quite a bit of that money goes into places like China, like I mentioned. So in a sense, therefore, yes, in a sense it is debt, but it is debt which is retirement money, which is basically a transfer going from this retirement into the sovereign wealth fund. So it's very different. And so what you have to look at, the reason why I'm saying it's different, is because you have to take that debt and net it out with all the money in the sovereign wealth fund. Net it out against, say, GIC, Temasek, and MAS. And what you'll end up seeing is that you actually have a lot of extra money. So that's the thing about the net debt.
Okay, let me I want to play one clip from David Morgan, then I'd be interested to again get your opinion with what he says. Okay, here we go.
Many argue that the silver has been completely demonetized, and so it should trade more like an ordinary industrial metal like palladium, and so the gold and silver ratio no longer matters. Your thoughts?
Well, it's still a monetary aspect. I was given kind of a debate by one of the young up-and-comers, very nice guy, pretty thoughtful, about silver being money or not. And, of course, I had to take it to got a little help. You know, I never said I know everything. Went to one of the best constitutional legal people in the world, in my view, Dr. Edwin Vieira, and we discussed it. So there's two aspects to it, Max, and I'm not trying to complicate it. I was trying to make it real simple. Legally or economically. Legally, silver is money. No ifs, ands, or buts about it. It absolutely is legally money. But I'd be kind of stupid to go into Walmart with a legal tender 1 ounce U.S. minted silver eagle, put it on the desk and say, here's $1, which they would have to accept legally for, half a pack of gum. But I could do that, and it's absolutely legal. The other part, which is more important, is it economically money? And the answer is really not, because of what I just said. Who would, in their right mind, put down something that's got a much higher value in the open market than it has on the face value of that coin?
Okay, silver, gold, you think it could ever be either money again or perhaps a backing of some sort of new money that might come into play, such as maybe crypto?
In a crisis, yes. Actually, I think that we are going to see a much more important role for crypto once we have a financial crisis. Because when you get a situation like we had in Greece, for example, where you go to your ATM and you're supposed to have $100,000 in your bank account, and the ATM says, sorry, we're out of order, and all ATMs are out of order, and you cannot get a hold of your cash, and you cannot wire money out, and suddenly you realize that all you really have is a few digits on a computer logged into the banking's IT system, and right now you can really access it, and you will find that Bitcoin cannot be shut down, for example. So cryptocurrency is something which is going to become, I think, very, very popular when a crisis happens. And it's the same thing for gold and silver. As I mentioned, if we even say less than 0.5% of some money which is in equity is going to flow into physical gold or silver, or more of it is going to fly into Bitcoin, these assets are going to go way up. I don't know when it's going to happen. I thought it would already have happened. If you asked me 10 years ago, I didn't think we would, still be not have had another crisis by now. But it's going to come for sure. And typically, the longer it takes for the crisis to come, the worse it's going to be. So, yes, this is going to make crypto, gold, and silver go up.
Okay, and we have another, question where they're asking if we're based in Freeport or Singapore itself. And I think also if they're going to talk about storage, that also might lend into who owns the storage facility.
Okay, so what you have to understand, so you mentioned the Freeport. Now, the Freeport is what's called a bonded facility, which means that it is still in Singapore. It's not that it's not in Singapore. It's just for custom purposes. This is an area where you can have goods imported without it being subject to Singapore customs. And the reason why it's not subject to Singapore customs is because Singapore custom trusts the operator of the Freeport that whatever goods are coming in are not going to go into Singapore proper without GST. And it's not something that's specific to the Freeport. There are about 20 companies in Singapore which also are bonded, and we are one of these companies. So our storage facility is a safe house. It's also a bonded facility, so not any different from the Freeport in that sense. The only thing that makes the Freeport a bit special is that it's built right next to the airport, and it's actually possible for some people to access the Freeport directly without going through say airport immigration. So it's not that customs makes the Freeport special. It's special that it's located right at the airport. So we are not located at the Freeport. When we first started back in 2011 with the storage system, the company is around since 2009, 2011 we started our first storage offering. We outsourced to some storage providers at the Freeport. Because you have to understand, the Freeport is just a building, and the Freeport then subleases storage space to different vault operators in there. And these vault operators rent the space from the Freeport. And back in the early days, we rented space, and it's a super impressive facility and all of this. But the problem I had with the Freeport is that once you look at the storage contract, there were two big issues. One of it is that at the time there was no mysterious disappearance coverage. So there was a funny clause which says that if your gold mysteriously disappears, it's not covered by insurance. And the other big problem was there was a force majeure clause in the contract, which states that
if there's going to be a nationalization, confiscation, or other such thing by any government anywhere in the world, you have to keep the vault. You have to identify the vault operator. And I didn't like that because my point was, well, I came all the way here to Singapore, and I want to store my gold under Singapore jurisdiction, not under any government jurisdiction. And that's, something that I thought was a big deal. And I kept on making hoopla blah with vault operators and other people. And I always asked a lot of questions. And basically, I asked them, what's going to happen if the US nationalizes gold? Is that gold going to go right back to the US? Because I have to sign this clause. And, some of them would say, well, it depends on the lawyers, blah, blah, blah. Some other ones were very straightforward and said, yes, it will. Because these companies had exposure back to the US. It's just like a bank. If a bank is going to be fined by the US for, say there was a French bank which traded with Cuba, and under French laws that's not a problem. But the US says, hey, I've got sanction against Cuba. You traded, you financed some deals in Cuba. I'm going to punish you. I'm going to ask you to pay $4 billion. Is that bank going to pay or not? Yes, it's going to pay because it has so much exposure back to the US. The US might just say, I don't allow you to trade in dollars anymore because every SWIFT transfer, the wiring system, has to go through New York. And if I take that away from you, you basically can no longer do business. So no matter what happens, that bank is going to have to follow US law. If you're a vault operator which has storage locations in the US or is otherwise very dependent on the US, you're going to have to follow US law. If you're a US-based vault operator, of course you're going to have to follow US law, right? So it's the only way to address this issue is to store the gold ourselves. And that's why we had to build the safe house. And when we built the safe house, because my background is software development, I used to be senior data architect for Commerzbank, building trading systems for banks and compliance systems, essentially. I put a lot of effort into building quite advanced check and control systems into the system, and that allowed us to get very good insurance. And that allowed us to get the mysterious disappearance coverage. And because we built our own vault, and it was fully vertically integrated, we didn't have to put in a clause which says any government. We just have a clause Singapore. And so if the US nationalizes gold and calls us up and says, hey, we want your gold, say, for person XYZ or for somebody else, or all your gold for whatever it is they're asking for, to be sent back to the US, in exchange I'm going to give you these dollars, we're going to tell them, well, go talk with Singapore court, see what they have to say. I specifically, I don't want to have U.S. jurisdiction, and if you want that, then you have to be very careful who you're storing with, not just where you're storing it, but who you're storing with and what jurisdictional exposure that company has, and so that's sort of one of the unique selling points, that we are just Singapore, and only have to answer to Singapore authorities, and so. That's a long story, but essentially that's why we ended up moving out of the Freeport and built the safe house. And the safe house actually has become quite an impressive facility. The Singapore government named the Freeport and the safe house as the two world-class facilities in Singapore. And we especially build it with the idea of storing silver. So everything is, very large. We probably have some of the largest single vault in general. It's just much larger than typical because it takes almost 100 times more space to store silver compared to gold. And vaults are normally built with the idea to store gold, not silver. We started off with the idea of storing silver as well as gold. So that's kind of what the differences between the safe house and the Freeport.
Okay, so we're heading up to almost 2 hours, so we'll have two last questions here. One, is there enough room for precious metals and crypto to work together, or does it have to be one or the other? The second, how strong would you say wholly owned Singapore banks would be in the face of a global banking crisis?
Okay, well, I start with the first one. Crypto and precious metals. To me, once I started understanding Bitcoin, and I first heard about Bitcoin in 2012. This guy was telling me to buy some Bitcoin for 10 cents, and I thought, yeah, sure, why not? I thought, why not pay $10 of Bitcoin, and it would have been millions now, but I didn't do it. But anyway, it's just how it is. So then I ended up really getting interested in Bitcoin again when China banned Bitcoin. Because when China banned Bitcoin, it kind of crashed. And then a few days later, it already recovered everything. And I thought, well, you know what, this thing is going to stay. This is not going away. And the more I learned about Bitcoin and really got spent a lot of time with it, I feel that Bitcoin, of all the different cryptocurrencies, is probably the one I would want to hold long term. And I feel that it's very complementary with gold and silver, because I would have people ask me, well, say I'm storing my gold in Singapore, and say we have the banking crisis, and now I need to get a hold of my wealth. How do I do this? Because even if I can sell my gold, say in Singapore, and now I'm having, say, $50,000, but you cannot wire me the money because the financial system is in trouble. How do I get my wealth? How do I get to it? And Bitcoin is one of the answers. I can say, well, I can send it to you in Bitcoin, or I can send it to you in Ethereum, or some of the other ones. So I feel that, if anything, cryptocurrencies plus gold, they actually reinforce each other. And I think as people start seeing it, it will actually become more and more of an alternative to the banking system. Because, you don't have to believe in Bitcoin to make use of it. You can just use Bitcoin to, say, buy some gold, and you store the gold, and if you need to get out of it, you can just sell it for Bitcoin and have it sent somewhere. And the only thing you need is a way of converting your Bitcoin back, say, into cash where you live. Or maybe at some point people can buy things in Bitcoin directly. There's a Lightning Network and other technology is coming which will make it a lot easier to buy things directly in Bitcoin, technically at least. Banks really don't like this, so there's still a lot of complexities there. But long story made short, I see them as complementary, and I think it's long term it's good that we have Bitcoin for precious metals and the other way around. And how strong would you say wholly owned Singapore banks will be in the face of global banking crisis? I would say banks are never really wholly owned, and banks, are intertwined very, very much. So it's hard to say how things are going to fall out. Having said that, Singapore probably, the MAS, the Monetary Authority of Singapore, which regulates local banks, tends to be very conservative, and they keep them at a pretty short lash. So I would probably think that Singapore banks are going to be one of the better banks when there's such a crisis. They do have a lot of reserves. They're insured by the Singapore government, which has a lot of money up to a certain point. That's insurance. But if you ask me where to put my money, say between a US, a German, an Italian, and a Singapore bank, I will definitely put it in Singapore. I don't know about US and Germany, maybe rank some similar. Italian banks, I would just put my money out, to be honest, because not just because of the banks, but because I think Italy is going to go back to the lira in the next 5 years. And what are euros right now might just become lira in those accounts. So I see a lot of risks there. So who knows what's going to happen, but I think it's, of the banks out there, it's one of the better choices.
Okay, so that'll wrap up this live stream. Gregor, we do thank you for being on. We're going to have Talvi Costa later on in the week. Talvi's a really young, brilliant guy. He has a lot of charts that he'll bring up that we can take a pretty in-depth look at some of his market analysis. But for now, we're going to be ending the show, and I have to give Gregor his salary for coming on.
That's great. I didn't know that.
Thanks
that's a big salary.
We'll see.
He's just kidding, yeah.
We'll see you guys next week, okay? Take care, everyone, and have a good night's rest. Bye-bye.
Thank you.